oil prices set to end week lower on Trump energy policies. London, January 24, Reuters. Oil prices edged up on Friday but remained on track for a weekly decline after U.S. President Donald Trump announced sweeping plans to boost U.S. production and demanded that OPEC move to lower crude prices. Brent crude futures gained 59 cents, or 0.8%, to $78.88 a barrel by 14:11 GMT, while U.S. West Texas Intermediate crude (WTI) was up 49 cents, or 0.7%, at $75.11. Over the week, Brent has lost 2.4% while WTI was down 3.7%. After a week of Trump being in office, the various executive orders are not being disruptive to oil supplies. Most of what he has done has been with an inward domestic focus, said Harry Chilingwaran at Onyx Capital Group. We were looking for pronouncements around tariffs, around Iran, Venezuela, and Russia. Ahead of Trump's inauguration, the market had built up a net long position in oil futures to hedge against price gains arising from supply disruption, but this has now started to unwind, Chilingwaran said. Trump told the World Economic Forum on Thursday that he would demand that the Organization of the Petroleum Exporting Countries and its de facto leader, Saudi Arabia, bring down the crude prices. He also said he would ask Riyadh to increase a U.S. investment package to $1 trillion, up from $600 billion reported earlier by the Saudi state news agency. I don't really expect OPEC will change policy unless there is a change in fundamentals, said UBS commodities analyst Giovanni Stonovo. Markets will be relatively muted until we get more clarity on sanctions policy and tariffs. Trump declared a national energy emergency on Monday, rolling back environmental restrictions on energy infrastructure as part of plans to maximize domestic oil and gas production. On Wednesday, he vowed to hit the European Union with tariffs and impose 25% tariffs on Canada and Mexico. He also said his administration was considering a 10% punitive duty on China. As attention shifts to a possible February timeline for new tariffs, caution is likely to persist in the market, given potential negative implications for global growth and oil demand prospects, said IG market strategist Yip Junro. Traders expect oil prices to range between $76.50 and $78 a barrel, Yip added. While bullish catalysts such as a significant drawdown in U.S. crude stocks are providing temporary positive swings, an oversupplied global market and projections of ailing Chinese demand continue to weigh on crude futures, said Priyanka Sachdeva at brokerage Philip Nova. U.S. crude inventories last week hit their lowest since March 2022, a U.S. Energy Information Administration report said.